Have you ever dreamed of living in Europe? Well, many of us have. I'm Sadife and I'm a strategy associate here at Nomad Capitalist. We are the go-to company for all your citizenship, second residencies, and tax reduction needs. And in this video, I will walk you through not one, but 6 countries that have low taxes in the EU. Now, even if the EU may be a destination of dreams for some, many wealthy business people and investors have actually backed away from the concept in favor of the tax-free nations in the Caribbean, the Middle East, or even in the Pacific Ocean due to Europe's stereotypical high tax rates. Now, the truth is that even if you're not a millionaire, it is actually possible for practically anyone to live in Europe full-time and pay low taxes on their income, despite the fact that doing so is a rare feat. Now, let's start with our first country on the list. Option 1, Sark. Now, Sark, it's a tiny European island, is one of the continent's best kept secrets. So although it is an uncommon jurisdiction, some of you might actually find it to be ideal for what you're looking for. Sark does not levy any income tax, inheritance tax, capital gain tax, or value-added tax on its residents, but it does, however, levy a property tax on each property and also a personal tax on each resident who has a property available to them for 90 nights a year, now based on their forfeit system. Everyone's annual tax is restricted at 13,500 Great British pounds, and although in practice it will likely fall between 1,000 and 4,000 British pounds. According to reports, only 4 island residents are actually paying the maximum. If you have a passport from the EU, EEA, Switzerland, the United Kingdom, or even Ireland, it is currently shockingly simple to actually establish residency on Sark. Then all you have to do is rent or buy a house on the island, and that would be enough. However, if you lack any of these passports, you will have to choose between, there are 2 choices, so the 2 following choices in order to relocate there. The first one is to invest in and take a controlling interest in a local company to generate income. Now, normally this would entail investing between 50,000 and 200,000 pounds and adding 2 local jobs, but obviously not counting your own position, or investing 1 million pounds in the regional economy. Now, bonds and stocks can be used for this. Option 2 is Jersey. Now, you'll pay tax on income, goods, and service, but there's no capital gains or inheritance tax. The maximum personal tax rate is 20%, and goods and tax services in Jersey is low, broad, and simple. Now, the rate is 5% with only a few exemptions. Company income from property or property development is also taxed at 20%. Any dividend or distribution from the company, though, is taxable in the hands of the shareholder. The potential applicant must significantly boost the island's tax income in order to qualify for the so-called high-value residency status and be allowed to purchase property in Jersey. Now, a sliding scale based on 20% of the first 725,000 British pounds of worldwide income and 1% on all income after that would be used to determine the annual tax contribution, which at current rates of tax would be in the neighborhood of 145,000 British pounds. So in order to move to Jersey, applicants must provide documentation by proving that they have enough capital wealth to actually generate more than 145,000 British pounds in tax revenue for the island. This documentation usually includes financial and other details. Guernsey is a well-known, top-notch worldwide financial center with high standards. Now, the general tax rate that Guernsey enterprises must pay is 0. There are no withholding taxes, no capital gains tax, no inheritance tax, or taxes on value added, although the standard rate of income tax is 20%. There are two ways for people with non-EU passports to move to Guernsey or operate their businesses there. The path for investor visa. Now, a candidate seeking Guernsey residency must have £1 million ready and in their possession. You need to make an investment in the bailiwick of Guernsey of at least £750,000. Now, there are three available investment options. Deposit in a bank in Guernsey, so purchase and upkeep of a different property on the open market, or a different chance permitted by the state of Guernsey. The entrepreneur visa path is an additional option that you can opt for. Under the entrepreneur visa option, applicants must invest £200,000 in a brand new or current Guernsey business that they own. Now, the money must be available for investment, and additionally, it must be held in the applicant's name. Option 4 is Gibraltar. Now, capital gain tax are not subject to tax. Gibraltar does not impose a wealth tax either, sales tax, or value-added tax. All items are actually subject to a 10% import duty, though. Starting a business or proving a significant net worth are the two requirements for settling in Gibraltar. Now, creating a company actually makes it simple for entrepreneurs to qualify for these programs, as is typically the case, but demonstrating wealth over the long term is simpler. Entrepreneurs who operate through Gibraltar firms can pay a maximum amount of tax on their wage by using the high executive possessing specialist skills approach. Only the first £120,000 of your yearly income will be taxed. Therefore, you must actually earn more than that. Although you must additionally take into account any Gibraltar corporate tax that practically equates to a flat tax of £29,940. You must also own or rent a residency in Gibraltar as well. The Category 2 visa scheme is equally intriguing, but to be eligible, you must have a net worth of £2 million or around 2.5 million US dollars. Option 5 is Monaco. Monaco's corporate income taxes are currently set at 25% beginning in January 2022. And while its personal income taxes obviously remain at 0%. In order to do this, you typically need a €500,000 bank deposit and to buy the property there, or in some situations also rent it out. The wealthiest business people and investors are allowed to live in Monaco because parking spaces frequently sell up to probably about €1 million. It's also only available to those who are prepared to make the move. Now, after spending 3 months there each year for the first 9 years, you can actually apply for what amounts to a permanent residency. Although, in order to do that, you must stay 183 days per year. Option 6 is Andorra. Now, Andorra is ideal for anyone with capital gains or generational wealth because in Andorra, there is no wealth tax, there is no gift tax, there is no inheritance tax, and only a small amount of capital gain tax is applied to most real estate sales in Andorra. The only tax is an income tax, which has a generous exemption of €24,000 and a top rate of 10% that kicks in at €40,000. There are actually 2 ways to qualify for residency. You can make an investment or start a company. In either case, you must agree to commit to residing in Andorra for 90 days each year. So you need to rent or own a home, keep a bond current, maintain a health insurance, and many residents are income from the country's already low tax rates depending on how their money is produced. You must submit your resume, additionally a business plan and €50,000 bond for a single application in order to register a firm there. Now, this option needs far less money upfront, but you still need to operate a business. So actually you should factor residing in Andorra into your entire corporate and tax strategy. You can invest up to 400,000 euros in Andorra as a passive resident, which may include buying real estate, so you can opt for that. And there you have it. Those are the 6 countries in the European Union that you can opt for that have low taxes.